So, Jerry,
So, John,
Feds just cut their interest rates. Is now a good time to buy?
it is, I think. I think that's what everybody's been waiting for. What's interesting, though, it's been about a week since they cut the interest rate. Everybody was anticipating a quarter point, ended up being a half a point. There's a lot of debate on that. Is that a sign of panic by the Fed? And should I wait, or is it a good time to buy? I think the most interesting thing a week after is only 28% increase in home purchases applications. The majority of people went to refi. So if you bought in the last 2 years, it was going on the refi. But I think a lot of people get caught up in the Fed and in the mortgage rates and not knowing, like, why should I buy now? Shouldn't I just wait? And I do think that your personal finances have more to do with your personal situation, and you can wait forever and be paralyzed by waiting on the Fed to cut the rate or interest rates to come down.
Well, we've been hearing that for quite a while now. We're going to wait till the interest rates drop. We're going to wait. And so here they are. They took a half a point, pretty aggressive.
Right. And I think the problem is, though, everybody's looking at the Fed rate, and the mortgage rates don't really follow the Fed rate. I always try to tell my buyers, if you really want to know where interest rates are going or keep a eye on what they're looking at, you look at the 30-year Treasury yield bond. That's kind of a more indicator of where the actual mortgage rates are going. They follow that way more than what the Fed rate is. Because if you kind of look back in 2008 when they were dropping the Fed rate and they even went negative on the Fed rate.
That's right.
In 2009, it had very little effect on mortgage rates. Mortgage rates were quite high compared to what the Fed rate was. And then as you look at the 10-year Treasury and they do things to get people to buy that and you follow that yield rate is where you can find out, hey, mortgage rate's going to go up or down. It's a good time to lock in. There hasn't been a lot of volatility this year, which is kind of nice. It's kind of stabilized out in that 3.6 to 3.8 and kind of stabilized in there, whereas last September, 22 going into 23, you kind of saw it go from 3.5 all the way up to 5.25, and it just stopped the market. When it got to 5.25, interest rates were close to 8, and that just stopped everything. So that's not a good time to buy. But when you're seeing these come through, when you see stability, I think that's a good time to look and buy, especially if your life dictates it. Like, my lease is ending, or we're going to have a child and we need a bigger house. You can wait forever, and there's no perfect time to buy. The people that try to time the market often miss.
Absolutely. But with this kind of an aggressive Fed reduction rate or rate reduction by the Fed move, you still think we're in a stable market?
I do, because you got to look at kind of a combination of things. It's not just the Fed rate. It's not just the mortgage rate. It's what kind of inventory is out there. So, when we have low standpoints of inventory, which is what kind of happened in 21 and 22, kind of that in there, COVID hit. A lot of people didn't have their houses on the market. It took it off, and then they never put them back on the market. So there was a shortage of available homes. But then we had a lot of incentives from the government. A lot of people were getting stimulus checks and things like that, and they had extra money. So they were taking that to go buy a house. Well, because so many are looking and not a lot out there, you cause prices to go really high, which knocked a lot of buyers out of the market. So then they're like, well, I'll just wait. Well, then because of all that, you had runaway inflation, Fed raising their rates, which then caused mortgage rates to go up. And guess what? I waited. Now I can't buy anything because I can't afford the mortgage rate. I lost $100,000 in buying power because of how high the mortgage rate is. So I think, you want to avoid the spikes and look for the stability. In the last year, we've seen about what we call a 3.5 month supply. It'd take us 3.5 months to kind of at the current demand to go through that supply. And understanding supply and demand dynamic is a better way to approach buying a house than just watching what the Fed does.
And we've said this before on a previous podcast that if interest rates keep dropping, buyer demand increases, prices are going to go up because
Correct.
there's going to be buyers are going to be competing against one another. So stable market is ideal.
Correct, especially for a
purchase.
buyer. For a buyer, you have that kind of leverage. I mean, we look back and like everybody talks about, am I going to see what we saw in 08, 09, and 10, where you just saw a collapse in the housing market? That was almost a unicorn. It happens once every 100 years. The last time it was 1929. So it's not like that happens all the time. These type of markets where you have a little bit of increase in mortgage rates, dip in supply, dip in demand, it's really, when you look at the fundamentals, is a stable market. And you're not going to be able to dictate, hey, your house is listed at 500, I'll give you 250. They're not going to take it.
Right,
there's
right.
no need to take that.
Right.
You might have that person has a house listed at 500. Will you take 450? Well, in a stable market, or if it's been on the market a while, yeah, I might. Also, they might offer concessions. I know a lot of people don't understand what concessions are. When you're representing a buyer, do you ask for concessions in this type of market, or what kind of market do you look for when you ask for seller to give concessions?
Well, even if it's in the seller's market, I'm still going to ask for my buyer some type of concessions. But in a stable market like we are, yeah, I'm every time I'm going to ask the seller to pick up the home warranty, ask the seller to pick up some of the buyer's closing costs. Absolutely. Will they get it? Sometimes they do. It just depends.
And I think that's the give and take in a stable market is, hey, the seller's going, this is what I want. You as the buyer going, hey, if I got all this, I'll buy your house today. And
Right.
that's the negotiation part of it. That's the fun part.
We know 2024, we're in pretty much a stable housing market.
Correct.
Inventory is been increasing. Days on market is increasing as well, but interest rates are starting to come down. So what would you advise for a buyer right now?
Right now, I'm telling my buyers, if your life demands, hey, I need to be out of my lease in April, well, let's start looking.
Yeah.
Because that's the decision. That's the drop down decision time is, hey, my lease is up. I got to do this. Or if I'm a buyer relocating, you can't wait on the market there. If you're looking at, hey, I want to buy in the next 2 years, well, then let's keep track of it. Let's see. But if the right house comes up, let's be ready to make an offer. So let's get our ducks in a row and be ready to go.